This is Tony Palazzo at Bloomberg News, and I have Joe Ward. He's chairman and CEO of Groovy Corporation, based in San Mateo, California. And we're here at the Fortune Brainstorm's Tech Conference. Joe, tell me a little bit about your company and what it does.
Yeah, so Groovy Corporation was founded to solve the real-time problem of the web. It's been a computer science problem that has baffled the industry for quite some time, and what we're doing is we're enabling the live web for the other 99% of the web that can't go live now. So say, for example, at Bloomberg is what we count in the 1% that is real time, i.e. when things change on the web, it updates in front of you live. The rest of the web is refreshing, and refreshing is not real time. So we see that that's an incredibly exciting opportunity. And the reason why is because right now a lot of business models aren't sustainable. The frustration of users is continuing to grow. Businesses are looking for more timely information, as we've seen here today with Walt Disney. They're looking for and paying for more immediate access to information, but yet the database still continues to be perhaps the single largest bottleneck on the web today.
So if I have a website, if I'm running a website, say Bloomberg.com, or I'm a web publisher, what do you do? What do you do for me? What will if I purchase your service?
We will real-time enable that site. So we will give you the box or rent it to you, or you can download the software and install it yourself. And you can replace your existing databases, which is the cause of that refresh experience. And the reason why they're refreshing is because the database itself is not real time. So we have a product which is called the SQL Switch, and it finally breaks through that barrier of delivering live data to the browser without having to refresh. And you can implement that by sitting it alongside your existing database. You can sit it as a replacement to your database as well.
So okay, and then as a user, how would the content appear different to me if I was using the Groovy technology?
Yeah, so from the user's perspective, all of a sudden it becomes very fast and becomes live. So by live we mean if you're doing an auction on eBay, the prices will change in front of you. If you're watching the news on Bloomberg, the Bloomberg news, as it updates, everyone will see the update at exactly the same time. It's not near time, it's actually in real time. If you're on Ticketmaster.com and it was powered by the Groovy SQL Switch, the business model could change for them or be a lot more effective, but at least from the user's perspective, it becomes really fast and dynamic. If all of a sudden there's 20 seats that disappear, they're going to disappear in front of your eyes as that happens.
And then how do I, assuming that I'm not extracting money from my viewer directly, like say in a ticket sale, how am I paying for your service, and how am I extracting more money from advertisers or?
Yeah, so in terms of covering the cost of the infrastructure itself that we would install, or that you would install using our technology, we've been doing benchmarking work together with Intel, which we're announcing next week at the Stanford Always On conference. And what we've discovered is it's cheaper running in real-time mode than it is in batch mode that we're doing today.
So it costs me less money to have your product than to run a standard, say, Oracle database.
Correct. The reason why is because those databases have done a good job for a long time in delivering information in a refresh world. But the real-time world is different than what a database delivers. And what we're starting to discover is we think that 20% cost reduction in the overall value stack is quite achievable by moving to real-time using the Groovy SQL Switch as opposed to refresh.
Okay, and then is there an advantage in attracting advertiser dollars, or is there more potential in building advertiser dollars in this technology? And I know Bob Iger was up on stage today saying, hey, there's a lot of improvements that we can make in advertising for web content, and he's talking about entertainment, video and TV. I assume this applies to customers of yours that are, say, publishers of printed data on the web.
It does. I'm really excited about the media sector and the publishers, because at the moment people like Bob and News Corp and other companies are publicly saying they're trying to find a way to monetize their online web properties with their great content, and they can't find a way to break through to that next level. they're not looking for an incremental change. That they are looking for a step change, and the step change is not about measuring more hits. The step change is about measuring hours of activity. If the information's updating and you can take that widget off the desktop, or you can take it off a web page, you can put that on a desktop and it will continue feeding you with more news, more stock market information, more Twitter updates, microblogs, blogs. If the world is happening and it's changing and you're living in the now, you're going to keep that information open on your screen. And that's an opportunity to start saying, hey, we got those users for every hit on average of 3 to 5, let's say 8 or 10, 12 hours. Who knows? And it's device independent. So that could be on your iPhone, it could be on the BlackBerry, or on the web browser itself.
So people keep their web browser open for a longer time because they're not moving off the page.
Correct. It's information currency.
It's updating in real time, and there's more opportunities to pull more ads in or switch the ads out every 15 seconds or 3 minutes or...
Correct.
Yeah.
And on the flip side, from the advertiser's point of view, then they can have a real-time experience and understand where their advertising dollars are being spent live now, and what web properties are hot and what pages are hot, what news is hot, as it happens. Not as opposed to the refresh world where it's like driving through the rearview mirror.
Very good. Joe, tell me who your investors are. Tell me how much capital you raised, and tell me what your plans are, what your needs are in the future.
Yeah, so since we went through a company restart, so the original company had Intel and JP Morgan as investors. That company I wasn't involved in. I was its largest client. It was called Bullant, and I saw Bullant as the future, being the live web. They went through $50 million, and we bought the company out of administration. And we spent $3 or $4 million going through the process of re-architecting the back end, becoming more acceptable to the market by being SQL compatible, adding a lot of interfaces. And then on 31st of March this year, we announced the deal together with Intel, where Intel had taken some equity options over the company in return for helping us with the benchmarking and global go-to-market.
So how much has Intel put into you in the fresh round in the new company?
So the fresh round is privately funded, and Intel has put in the kind of work that I can't afford on my balance sheet, and I can't buy from them. So that's the kind of work that we get access to is things that Intel doesn't sell. Very advanced training, very advanced benchmarking work, access to the latest equipment. So that's the.
So they haven't put cash in. They already put their cash in earlier.
Correct. Yeah, okay. And look, there's plenty of money around, for things that are exciting and interesting, and could be potentially Web 3.0, who knows. But what Intel delivered for us was absolutely paramount in getting us to that next level.
Very good. Joe Ward, thank you very much.
Yeah, thanks for your time. Appreciate it.